The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And we're back in the saddle once again, dear friends. Again, this is your squeezably soft host for one more day of excellent broadcasting here on TFNN on the Power Trading Hour. Me, your squeezably soft host, once more back into the breach, dear friends. And we've got a market that's a little off today. Of course, if you've been listening for any time to TFNN, you've probably heard of something called Weird Wally Wednesday. It is the week before TFNN, all right, week before that we get somebody type stuff at me and then they distract me and I wander. My mind wanders these days. Anyway, this is the day that option market makers choose, mathematically, there's a good reason to do it, to go delta neutral for options expiration the third Friday of every month. So normally you get a great deal of volume out here and a great deal of activity. And it's interesting to see that we're probably going to see a lot of volume tomorrow. My guess is that with the New York Stock Exchange closed because of a quote technical glitch, that it is problematic for them to actually get those positions on and off. There is a reason, and that is that the New York Stock Exchange, why it only accounts for 20 to 25% of the actual trades made, is the defining signal for what the stocks should trade for. They may trade a 16th or an 8th or a penny higher or lower than whatever is available on the New York Stock Exchange. But that is always used as the guidepost to make sure that they don't wander that far away. If you're putting on options, you're pretty much looking at the New York Stock Exchange not having a lot of volume, but being the final arbitrator of what price discovery actually is, with 26 different electronic commerce networks trading stocks, those New York Stock Exchange stocks, outside of the floors of the New York Stock Exchange. So one thing I would say, first of all, is that I would almost bet dollars to donuts they're going to have a great deal of volume when this market does open. The president of the New York Stock Exchange came out and said that he'd have the thing open by 3. Who knows if that's true or not. But I would imagine that they think that they can get it back up by 3 and start getting quotes and then a little price discovery. There is something that we haven't heard a lot of in a long time called the plunge protection team. Anytime there is a market disruption, these folks get together, whether it's the Treasury, Goldman Sachs, they all have a hotline together. Basically, their plan is to just smooth the market out for a little while and let it go back doing whatever it did. If you go back to the flash crash of 2010, they stepped right back in, bought everything up, and guess what? A few days later, we were testing those lows of the flash crash. The same thing probably going to happen here. I'm not looking for a lot of movement. They're probably going to do everything they can to smooth the market out into the end of the day. Whatever was going to happen anyway is probably going to happen. It's just going to happen tomorrow. So if you were looking for some kind of blowout low to test those lows, maybe they'll try to keep it up for a little while. But again, those option market makers are going to have to come in. They're going to have price discovery. They're going to have options volume, which is very light today, to get everything going. And we're off 25 points on the S&P cash. Again, I would easily expected if the NYSE had not closed down that we probably would be printing somewhere around 2.8 billion shares on the New York Consolidated tape. That is the Amex shares, the New York Stock Exchange shares, and everything traded on the ECN. So basically, if you took the NASDAQ volume and the consolidated tape volume, you would have every publicly the number of shares traded on every publicly traded share in the U.S. And of course, we've had a few things going on. Of course, China continues to ruffle our feathers. Was kind of talking to Andy Heck just before the start of the show out here. He's of the same opinion that I am, and that is that there aren't a lot of coincidences in the market, and that we're closed today could be a variety of things, and none of them provable, by the way. Maybe some could stumble upon them, but it could be anything from China figuring out how to turn off the Cisco routers. We were having problems with routing and some people getting to the market before the market ever opened. There's actually these troubles started at 7:30, and you can tell because there is one gentleman that knows this market as well as he knows the back of his hand. That's Eric Hunsader. We've talked to him a couple of times on this show over the years. He came on right after the flash crash when he had the actual proof of what happened in the flash crash. And of course, the SEC all tried to find a dozen other reasons why he was wrong. He's basically dogged them and embarrassed them for people that know where to look. But they all pretend and extend what actually happened in the flash crash. He basically had them dead to rights because he runs a company that saves every tick, every order, whether they were executed or not. So they already know what happened, or he knew what happened. If you want a link to their website, just email me at path@tfnn.com. It is a little bit of inside baseball today. It's not something that we can see that we know is going to be, extremely useful for trading. But when big events happen or rare events happen, it's nice to know how everything works. It's the same guy that basically his car conks out. He can't open the hood because he doesn't know where it is. He could just reach in there, put a wire back on, and be running down the highway, or he's coming home on the hook, i.e. his car's being towed in. I'm the kind of guy that likes to know just a little bit more. I don't have to know how to build the darn thing. I do know how to look for a loose wire or put something back together and get it started. But it is what it is, which is a quiet market right now until we get everything fired back up. But you know what? There's nothing new under the sun. Stocks have quit trading before. They basically quit trading in China. You ever think that China just wanted us to have kind of a taste of what they were going through so that we couldn't na them so much? Wouldn't be too tough for them to just turn off some routers for the day. They've got, hundreds and hundreds of people whose only job is to hack America. It wouldn't be too tough. And we've had nation states come in. I talked about it in the previous hour with Steve Rhodes. We've had the Russians actually put the equivalent of a nuclear bomb into the trading system of the NASDAQ in 2010, September of 2010. We didn't find out about it until 2014, and they lied about it. So if we, the rare thing here is that they run right out and say it's not a hack. Well, it almost makes you think it's a hack, doesn't it? It may or may not be. The problem is we won't know. And I think they'd be better off telling people. But, of course, they'll always want to make sure that they don't tell anybody because, of course, the public can't be trusted with that kind of information. There is a little bit of you don't want a lot of other people to know because maybe they'll try it themselves. So there is that part of it. But I've digressed long enough.
Then it's all just a little bit of history repeating.
On this day, just strangely enough, the Wall Street Journal started to be published for the first time in 1889. Charles Henry Dow and Edward Davis Jones and Charles Bergstresser. Somehow he didn't make it on there for very long, but of course Mr. Dow and his Dow theory and his traveling circus of other ideas that I don't think hold water, kind of interesting ideas at their time, and Mr. Jones of Dow and Jones. So, we'll continue on. But nothing new out here, but kind of interesting. Andy, like I said, we were talking about what was going on out here, and kind of coincidence to see all these different things all happening in the same day. We talked a little bit about it in the previous hour. And there's a lot of zero-day exploits that went out into the wild on Monday. So I think that this will be a theme going on for a while. Basically, the hackers got a ton of zero-day exploits over the weekend for a company that was basically a bunch of hackers who got hacked. Those hackers were basically collecting hacks and selling them to Western nation and probably even the Russians, who knows. But all their top secret zero-day exploits, the ones that have never been fixed, went out on the wild, including a lot of damaging emails, kind of like the Sony hack over the weekend. And that a lot of people it's been kept kind of quiet. But I wondered when those zero-day exploits would start to be used, and maybe today's the day. Maybe not just in a newspaper or in an airline, but maybe in the markets themselves. Boy. Yeah. Everyone. Anyway. Yeah. That's it. The Eurozone was up a little bit today. Everybody's thinking little happy thoughts out here today. I would think that by Monday we're probably going to have some closure, mostly because of the legal ramifications of trying to save Greece these days. This has led to a big argument between me and Mr. Andrew Heck, and we've got a bet going on. I'll cover that here shortly. When we get to Asia, who knows what they were down? Shanghai was down almost 6%, Nikkei off 3%, and Hang Seng off 6%. But were they really? Nikkei's probably right. The rest of them, who knows? They got, what, some 2,000 stocks now that aren't trading, that have been asked to do that. And I will go back and say,
I informed you thusly.
Several weeks ago when we went ad nauseum over the shorting of VIP shops and the fact that, some people have been short stocks for a year in China that have never reopened, and they can't get their cash back out of it, which has always worried me. Anyway, we've got a little bit of action out here, but look for these markets to open again in about 20 minutes. I figure we'll be open by 3. They say 2:45. I'm saying 3 o'clock, just to be on the safe side. So maybe we get a little taste out here of what happens before the end of the day. But I'm looking for the plunge protection team to come out of the shadows and probably try to make this market as flat as they can into the close, get everybody a good night's sleep, and then we'll see what actually happens tomorrow. I think tomorrow will be the deal. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I talk about it from time to time, but there's no real trading going on at the New York Stock Exchange. It's all out in a building in Mahwah, New Jersey. This building was built several years ago, kind of an afterthought in 9/11 that you needed to have a super secure computing facility for trading. And it's a place where you can be shot on site for trying to enter. It has basically been defined as a some level of security that equals nuclear missile silos. And you can be shot on site for coming in. It's not that far away from a high school, strangely enough, but it has a moat. It has all kinds of electronic whiz-bang stuff to keep people out. And that's where all the action's actually going on. We've got Dennis today. Oh, actually, Pat in Dennis, Maine, I guess. Massachusetts? How you doing today, Pat? Okay.
Hi, Massachusetts. Okay, I got a question for you. Why wasn't this whole thing seamless? Why didn't they're supposed to have multiple redundancies after former fiascos? Why didn't they let the backup systems kick in?
Well, as far as they're concerned, at least what they're saying is that the ECNs are still trading, right? So literally,
Right.
if you wanted to sell something right at this moment, you could.
Right.
Okay. There's no real price discovery because there's no central clearinghouse. This would be like, 200 years ago before even telegraph, when there's nobody actually talking to each other all over the country, right? Wheat may be trading for a whole different price in California than it does in New England. So that is the real problem out here, is that there's no central clearing authority right now, and that's why volumes are a little light out here. But the idea that computers are never going to go down in the New York Stock Exchange, probably beyond the scope of reason. What I think actually happened, if it happens during the day, then there's probably a bigger problem that they are not talking about. They're calling it connectivity. And that generally means that either the routers and or some of the backbone of the internet is failing. They've got direct wires, though, from pretty much all the major offices in Wall Street directly to that building in Mahwah. I hope I'm pronouncing it right, New Jersey. So it's not like a lot can go wrong between those two. But like Andy Heck, when we were talking, there's three major things going on out here. What it could be is a denial of service attack, which is called a DOS attack.
Right.
Which means that they just basically, it's kind of like crowding the phone lines to your congressman when he's going to do something stupid. Everybody calls him at once and no one can get through. My guess is that that's the most likely scenario, and that we've just, I think, I didn't get a list of them. I was going to, and ended up talking with Steve Rhodes for a little while. But I can remember 4 or 5 different times when they said nothing happened, and then you find out that there was a congressional investigation, and the reality or the truth came out 2, 3, 4 years later of what really truly happened, and they knew it at the time. They just don't want people to know. So we're not going to know what happened today, no matter what they say. I'm not going to believe it. In a couple of years, if nothing else comes out, then maybe you got to believe it. But it's kind of tough. But everybody's pushing the fact that they're using Red Hat open Linux systems and everything else, and that's not the problem. It's always an individual that does something wrong. In fact, we broke the codes from the Nazis because all the people that were sending messages back and forth that were encrypted did something wrong, which is they repeated the same message without changing the little gears on the machine to send them. So once you had 2 of them that were identical, somebody would make a mistake in one with Morse code, and then you could start to unravel everything, and that is the problem. There's always somebody that's going to do something slightly wrong and give hackers a edge into the system. And this is happening on a day where everything's falling apart in China. Just makes me think that maybe the Chinese or the Russians or something like that were more than willing to throw a shoe into the mill, which is the definition of saboteur. It came from the people throwing their wooden shoes into the mill machinery because it was taking their jobs. But I don't know. But to me, too many things out here. Will we know? No. They want to make sure that we're kept dumb. So anyway, you want any other questions?
Yeah, I had a few other comments.
Okay, let's go into the break here, and then we'll be right back with Pat.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back from Pat. How you doing?
Good. I just wanted to say I'm familiar with the concept of denial of service attacks, and either that or routers make sense. But you know something is fishy when the FBI comes out and the SEC, after lunch, of course, and the Treasury and the White House all have comments about this. I mean, and they're all saying nothing to see here. Move along, no problems.
Yeah, don't pay any attention to the man behind the curtain.
And then the White House spokesman, whose name I love, Josh Earnest. I mean, you can't make this stuff up. He comes out and he's got a few words to calm the troops. So there's no so the herd doesn't panic.
Yeah, there's no stampede here. Nothing to see. No. Go along, move along, and nothing to see. And, you never know what the truth of the matter is, and like I said, it'll come out years later, if it at all. But we've seen enough of it to know what the plan is. They're not going to tell us even if they knew. But it's kind of tough to tell.
I got a suggestion.
What's that?
I got a suggestion.
Okay.
When you're talking about China stocks, you could play a little bit of Hotel California. China stocks is where your money checks in, but it never checks out.
Well, like I said yesterday, I covered my short probably a little early because I couldn't get an answer of what would happen if I would get trapped in them. So I left some money on the table, but to me, the return of your money is more important than the return on your money. And after just the stories of how many of these people that have been short these frauds that they've just quit trading, and some of them over a year. It makes me wonder whether you'll ever see that money back out of it. But here's a song I like better than Hotel California for Chinese.
I like Chinese. I like Chinese. I like that tiny little tree.
I still haven't found out if it's I thought it was the Japanese with the tiny little trees, but maybe the Chinese do too. I'm going to have to dig into that one day. But I like Chinese. Anyway,
Well,
anything else?
No, that's it. Thanks, Loads. That was good timing. You had a very timely exit on your short.
Okay. Thank you very much.
Okay, bye now, David.
Oh, you bet. Now we're going to get to some news. Now, this is part of an ongoing war. It's a war. I hear it's a war with Andy Heck, and we are debating and now betting on whether or not Greece will leave the EU. I suspect that they will. He suspects that they will not. And, of course, one of us, and maybe both of us, will be wearing underwear on our heads. If they neither come nor go by January 1st, we will both take a bullet. If one of us is right, then we will have to do an entire hour of our show with underwear on our heads. And I suspect that I will be right. We'll talk a little bit more about this. I did want to get into something that was out here this morning, and it came through. I have a feeling I've got an edge on it, Andy, because I've been listening a little closer to what the Germans have been saying and the English have been saying. But this is pretty much how it went overnight in the ministers' discussions. But this guy named Nigel Farage, which is he's kind of a big to-do in the UK. But he had this to say. It runs a couple of minutes.
This isn't just Greece we're talking about today. The whole of the Mediterranean now finds itself in the wrong currency. And yet virtually nobody in the political arena has got the courage to stand up and say that. Indeed, I feel that the continent is now divided from north to south. There is a new Berlin Wall, and it's called the euro. And the old enmities have been resumed. Just listen to the way that the German leader of the Christian Democrat group this morning attacked Mr. Spiras. I think it was absolutely disgusting, but it shows the way North and South now feel about each other. Mr. Tsipras, your country should never have joined the euro. I think you acknowledge that. But the big banks, the big businesses and big politics forced you in. Goldman Sachs, the German arms manufacturers, they were all very happy. And when the bailouts began, they weren't for the Greek people. Those bailouts were to bail out French, German and Italian banks. They haven't helped you at all. And these years of austerity, these years of high unemployment, of increasing poverty, none of it's worked. In fact, your debt-GDP ratio has gone from 100% at the start of the crisis to 180% right now. It would be madness, sir, to continue on this course. You have been very brave. You called that referendum when one of your predecessors tried to do the same. The bully boys of Brussels had him removed. They tried their best again. Mr. Juncker said you would have to leave the euro and leave the European Union. Even Mr. Schulz, the president of the parliament, who one would have thought might be neutral, said that if the Greeks voted no, their power supplies may even go down. There were threats and bullying, but the Greeks stood firm. But, sir, you cannot have your cake and eat it. They will give you no more, these people. They can't afford to. If they give you more, they'll have to give other Eurozone members more. So your moment has come. And frankly, if you've got the courage, you should lead the Greek people out of the Eurozone with your head held high. Get back your democracy. Get back control of your country. Give your people the leadership and the hope that they crave. Yes, it'll be tough for the first few months, but with a devalued currency and with friends of Greece all over the world, you will recover.
Well, what is more interesting on this thing was if you see the videotape of it, it's just hysterical because the Prime Minister of Greece is sitting there just rolling his eyes and it looks like he's got a bad case of cramps and intestinal gas, and it's talk about rabies, foaming at the mouth, all kinds of stuff. It's pretty hysterical political theater. But my point, and the reason why I think Andy is wrong, and we'll figure it out, is that that feeling among the people, especially of Germany, who's going to shoulder 80% of any of the bailout, is just horrifically pervasive. They also have a problem because they let the deal expire that was up there. They have to go back to their parliaments now to get any deal through. And frankly, the way that the Greeks have acted over the last 2 or 3 months has really soured the German people on it. And I just don't know whether the Merkel could get it through even if she wanted to. And I have a feeling that maybe they're at the end of that whole thing, that they're better off to have a Lehman moment and let the whole thing crash. And at least that's my opinion. Well, anyway, we send our heart-filled thoughts out to the Greek people. Food fight! Oh my word, a little too loud there. I have to turn it down. Anyway, of course, it is Animal House over there, and there's nothing new under the sun. Anyway, some people have asked why. Why, David? Why? Underwear on top of your head? It's because Andy and I have one thing in common. That is fathers that were in the military. And somehow, something in the military convinced all those gentlemen to wear their underwear until it absolutely fell off them. So we both have kind of cringe for tighty-whities. And we felt that it was, we were talking about it during the same day. So that's it. Underwear on the head, the tighty-whities, they're coming out. And hopefully it won't make us cringe too much thinking of our fathers that wore underwear that looked like it had been shot with a shotgun. Still, it still scares me. Still scares me. Anyway, other things going on out here. Of course, China halting more and more companies. Who knows what's going to happen in that? But they'll find a bottom eventually. Just don't know when or where. A lot of people keep saying that a bottom has been made. In fact, I brought that up Monday. I was laughing my rear end off that they said a bottom was in, mostly because that's the kind of stuff that you heard right after the dot-com bubble burst. Every single time the market pulled back a little bit more, the bottom was in. The bottom was in. There was nothing but calls for the bottom was in. And, of course, the difference between people who are short the market and the market going up is that they stop out. They're kind of big cowards for the most part. When I'm short, I'm always worried about it. The one thing with longs, though, is that for the most part, they never give up. And I knew a ton of people that made a lot of money in the dot-com phase. And guess what? They gave it all back and more because markets only go up. We know that. Anyway, FOMC meeting minutes came out. There's not a lot to it. Didn't really seem to affect the market very much. And, of course, more than anything, we'll be getting these markets back up and running. We're off 32 points on the S&P cash, 2.26 billion shares. I'm looking for 1990. I thought it might even take the rest of the summer to get there. Maybe we're going to get there a lot sooner. I took a little money off. I was wrong. I've got 3 big option positions, and I had the opportunity to get out with a profit on one that I entered too soon, and I think I'm going to re-enter it on any kind of bounce. So cut my resistance a little bit down in the daily newsletter, and we'll talk about that in a little bit. But well, still made money. That's all that matters, I guess. But we will continue to persevere in that. I've got one other position, and it looks like I'm going to probably be taking the money on it tomorrow, so we'll talk about it then. But we're waiting for the market to open back up, It should be open before the end of the show. We got about 3 minutes to the break. And that's it. Let's get to some charts out here and look at some of the stuff that I am looking at. Let me get my charts up here fairly quickly and see what else is going on. Especially in energy, we've got a ton of stocks that are out at these lows. Yesterday, a lot of people were calling for a bounce, and the one thing that I did not and could not see was how many of these stocks were at the bottom that were getting the kind of love that testing lows on half the volume should be getting. And it would continue to be problematic, but from anything from XOM to the rest out here, it was just tough to see any real opportunity to bounce. And of course, on some of these, we actually had bigger volume, which is what is concerning me. ExxonMobil, XOM, yesterday you had 15 million shares going into 16 million shares. That's probably a tie going to the runner out here, and that still kind of disturbs me somewhat. We also have some other stocks out here in the energy field. Microsoft, of course, it kind of has a little bounce out here today. They came out and said that they're going to be getting rid of about 7,500 people. They also are doing a giant write-off. About probably a week, maybe 10 days ago, I reported about how the CEO said he had some difficult decisions to make. Pretty much what he was talking about is writing off the entire Nokia acquisition by his predecessor. Anybody that has listened to the show for any length of time knows how much I think and how bad historically CFOs that become CEOs are. I suspect we're going to see that same pattern eventually develop in Apple. We've seen them buy Beats. We've seen the iWatch come out. And if you didn't see the news on that, boy, talking about a stillbirth on it. We were talking several days ago about Apple coming down to the 123 to the 121 level. So we've got to look at that. Microsoft actually does not look too bad here. The volumes have really pulled back. But again, probably should be getting bigger bounces out here on the lower volume that we saw. I mean, this thing took off. What is it? Control W? I think it's wrong one. Control W? Is that it? Yeah. On April 24th, this thing gapped up with 131 million shares. We're back in these lows with 36 million shares. This one does not make me as worried as some of the others in this market, but we will continue on. A couple other ones that were interesting to me are, and we talked about them yesterday, are these stocks in the Canadian solar. Some of these others in the, I think we talked about TAN, the ETF for solars yesterday. None of these look like they've bottomed either, although they're coming back into light volume. Canadian Solar, CSIQ, one of my favorite stocks because I made a absolute boatload in this one off the 2009 March lows. But this one gapped up with 14 million shares. Down in here at about 3-4 million shares. But these things should be bouncing and bouncing strongly. They are not. It may be the dog that didn't bark, much like the Sherlock Holmes story. Be back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Basil's in the next hour, so we'll look forward to him. Of course, it looks like they will not open the NTSE, as they call it, NTSE, until 3:10, so we won't get a good read on it. But, of course, we're continuing to see market conditions deteriorate. And did I just accidentally break something here? I think I did. Hang on a second. I've got to get everything. Well, I can leave it alone here. Yeah, 3:10. I just closed my window for quotes, so problematic out here. If I can get now my mouse has gone insane. And then John Logan in the 4 to 5. Yeah, okay. Canadian. Oh, we were looking at Canadian solar. Looking at energy, I wanted to get back to that before the end of the day out here. We've seen some of these, especially natural gas players like EOG. They got into the lows yesterday with higher volume also. So we're looking for at least a retest, but these don't look as good as they could. Kind of like the way that EOG finally came off this last 101.36 high back down on lighter volume. But as we got back to the lows March 13th, $84.10, we broke it, higher volume, and I think we had a couple of emails last week about natural gas, and my answer is probably the same every summer, and that is probably wait until the heat of the summer, about mid-August. To me, that looks like a much better bet, especially on these stocks that have to or are heavily weighted toward the natural gas side of the equation. We've had some stocks that have bounced and are not looking all that bad. Like I said, some of these at the lows are continuing at lows and going lower. Some of these chart patterns literally could be bought if the market would cooperate. Just so many more of them are at lows ready to go lower, though, and why I remain short. On Juniper, which is one of these stocks that really doesn't look all that bad out here, on the 24th of April, it went up to 18.5 million shares, came back into this gap today or yesterday out here with 4.5 million shares. That's against the gap up on earnings of 18.5 million shares. So really, there are some things out there. This may be a much more diverse market than I suspected. Some of the IPOs out here continue to augur back to the price where they IPO'd at. One of them is El Poco Loco. It wanted to be a CMG kind of like Aura. At least that's the way they were selling it when this did come out. Of course, it raced from about this price, just a little under 20 bucks, up to $41.70, and has continued to sell off since then. This may be actually one that's buyable if it could get back down a little bit lower, closer to the IPO price, which I think is 16 bucks. But that's it. What else do we have? Oh, we talked about Microsoft. Another one out here, Netgear, looks rather interesting. Some of these are coming back down to their lows, and volume is fairly light. Netgear, one of those. Let's go to a little tighter chart out here. If we do get some juice in them, a lot of these are going to pump right back into the trading range. But everybody's going to ask me whether or not these things are going to have some kind of V bottom or if it's going to be a U bottom. We've been talking about that since gold went into sideways action. It looked to me, at best you could hope for was a U type low. And I think a lot of these, the energy just coming out in the last week or two, basically lighter volume down here, but still makes me think that at best you're looking at U bottoms. In the meantime, sell when you can, not when you have to. And we'll catch you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.